Should you buy a negative cash flow? Probably not, but what if? Stay tuned for this episode of Prime Properties TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join me here today. Every week on Prime Properties TV, we take a closer look at the Toronto real estate topics and updates that matter the most to you. And in this episode, we're going to examine whether buying negative cash flow condos is a good investment. Spoiler alert. Most of the time it's not. But I'm going to get some flack for this. But for those of you who are seasoned investors, this may make some sense. It's just some, maybe a little bit more. We'll see. You can watch this and let me know. So if you like advanced strategies like this, make sure you smash that like button and subscribe to the Prime Properties channel. The button for subscribing will be right here so you can get more awesome real estate content just like this. Now, if you've been following me for some time, I don't know, 1 week, 2 weeks, maybe a year, you'll probably know that I'm very, very big on having a property pay for itself, meaning cash flow positive. So you want your property to rent to pay for itself because it allows you to survive the short term and reap the benefits in long term, because that's where the money is in real estate, long term, like 3-5 years plus, way further. So when your property pays for itself, it doesn't matter if it's worth $1 or $1 million, because you can ride out the price fluctuations that I guarantee you are bound to happen, just like this condo downturn that we're experiencing right now. So the question is, why would you ever want something that is cash flow negative, right? Such as a condo. Let me know if you have any negative cash flow properties right now that you're owning. Leave a comment section below because I love to see what the reasoning for it. Now, for me, some of the context I need to explain to you and why a cash flow negative condo may make sense is basically it's impossible to get a condo to cash flow positive right now, with a few minor exceptions. One of them was the micro condos I talked about, where the small units were small, low taxes and low maintenance. And those are just about break even. Yes, those exist, I talked about before. But with most other condos, a standard 20% down, 30-year amortization mortgage, the numbers just don't work, especially right now. It only works if you increase it to like 35% down, but then you're now like $175,000 in the property instead of $100 on, call it a $500,000 purchase, which is not the best use of your money. However, a negative cash flow condo does make sense for anyone who's chasing more growth and can back up the negative cash flow with positive cash flows from other properties in the portfolio. Allow me to explain. If my entire portfolio cash flows, I call it $1,000 a month right now, and with like little houses and small towns with 2 units, then I can absorb a minus $300 to $500 a month negative on a cash flow condo. Negative cash flow condo, right? So I bring my total portfolio to like positive $500-800 a month, which ultimately is not the end of the world. It depends on what your end goal is, because if you're trying to replace income entirely with rental income, no, this makes no sense. Don't do it. But if you're trying to grow with more equity and you're willing to take a calculated risk by buying it in a depressed condo market, somewhat, given my last video, it's kind of heating up again. But for that instance, it makes sense. But if all things are being equal and you bought a $500,000 condo in a small town with 2 units here for positive cash flow and a $500,000 condo in Toronto, the 2-unit, 500 smaller townhome would definitely win if appreciation was all the same. But most of the time it's not. So if you believe that the condo prices will bounce back given the immigration in the coming next few years, and you can 100% take that calculated risk right now. But if you look at my calculations, I'll put on the screen right here, you can see that the condo only needs to outperform the smaller $500,000 small town home by 3% in terms of total growth to beat it. And the condo is easier to manage and probably newer, so no maintenance. Of course, as you continue to hold the property in Toronto and Toronto outperforms the surrounding GTA area, the spread between the two gets bigger and bigger. And what you peg that percentage at is up to you. And that's why this may make sense if you're after growth and equity. And the sub-strategy to all of this is that you may want to buy something that was finished after November 2018, so that when the rent control is lifted by the end of, I think, this year, 2021, you can increase the rent back to normal without being stopped at the 2% limit, so that you can increase your cash flow that much more. Now, this strategy doesn't make any sense for first-time investors, meaning your first investment property, unless you have a really high income and can sustain it, or you're just too busy and don't want a property far away. You just feel more comfortable with the property nearby. However, for anyone who has like a portfolio that can sustain a few $100 negative cash flow, this makes sense, right? We grow our wealth in real estate not with cash flow, but with the mortgage being paid down by the tenant and the appreciation that's compounded on top of that every single year. So if you're trying to grow your wealth, this is 100% worthwhile as a calculated risk. I know there'll be a lot of you out there who think this will be a dumb strategy, because sometimes it is dumb depending on your situation, but those of you who are in a position to make use of the strategy, it's not that dumb. See, I was pretty much right on the micro condos we talked about a few months ago, and they've basically all been snatched up right now because they break even with the lower rents. So that was surprisingly fast. So maybe, just maybe I'm onto something here right now. Just maybe, bear with me. So if this is something that makes sense for you and you're interested in exploring this strategy some more, you can book a call with me using the link here. It's www.chazan.com. For the rest of you who are ready to give me some YouTube hate and flack for this strategy, bring it on. I'm ready. Anyways, until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.